Hey guys, Yspy here. So a viewer asked a day or two ago to get an update on Tqqy as well as Yspy. So those are the Granite Shares Yieldboost funds that are released. So these are the only two released besides the Tesla one. So yeah, and they had plans to release, like, I think there was over like 20 of them, but those are the only two they've released so far. Honestly, I don't know how this is going to change on how they're going to release in the future, because if you take a look at kind of, the product of this, it's not amazing. Let's be real here. So, without taking the dividend into account, we can see here that it's down since inception 24% for the Yieldboost QQQ ETF and 19.6% respectively on Yspy. So there's that. I also can see their assets under management is pretty low, right? Only about 1.12 million and 1.83 million. If I move over to something like SDTY, which is the Yieldboost version, sort of, kind of. Now, this is more of a competitor. I would say this is the closest thing that Yieldboost has. And technically, this is more of a competitor to something like QDTE and SDTE. So there's or what is the other one called? But those are the round hill funds. Or it's like XTTE, right? XTTE. So, but these are the closest things you're gonna get. Now, obviously, the Yieldboost funds technically hold their underlying funds are leveraged ETFs, right? So for the TQQY, it's holding TQQQ, and then for the other one, for the SPY, I think it's holding XPXL or UPRO. But those are 3x ETFs, respectively. So yeah, you can see here that the assets under management for SDTY is around 11.5 million. So on the SDTY, and then about half of that for the QDTY. That being said, just the QDTY by itself is actually almost like 4 or 5 times larger than the other two, with SDTY being actually almost 10 times larger. I think it is more than 10 times larger. So that's something to look out on. And another thing to state is the Yspy and TQQY have only been out since the 26th ish, or to 24th, 26th from in February. So it's actually only been a little bit. We can see here that it's currently May, so it's been technically about 2 months. I think I stated yesterday in my portfolio update that it had been 67 days since those were released. So that would be 68 or 69 days from now. So just to give you a heads up that yes, it is only in the last 2 months, and to be another another form of transparency, I would say, is between February and this today. Let's go here real quick. Right, like the 26th and today, it has gone down about 5%, the S&P 500. So why does that matter? Obviously, these funds are going to have a hard time already with the market conditions, and we all have felt that kind of in our UMax portfolios as a whole. But more specifically, because they're holding underlying leverage funds, they're going to have to somehow, essentially cover themselves. So, well, because they hold those underlying funds, their funds are gonna go down, right? Just to put it bluntly. So I've I have two charts that I've come up with here. One of them is basically just the new funds compared to S&P 500 and YMAX. And you can see here that TQQY and Yspy are by far the worst. More specifically, Tqqy is just dying, right? And that kind of is explained by looking at the underlying fund. So if we see just from the year to date, I'm not going to go pull up the specific date, but just from the year to date, you can see it's down 25% with XPXL down around 19%. So that, there's that. Those leveraged funds are just dying right now because there's not a lot of growth, right? It's a bear market. So that's the number one thing that we see here. But what's interesting is obviously YMAX actually seems, and this is total return, by the way, so this is dividends accounted back in. We see with YMAX, it's actually gone up. It's a lot higher, and it's actually further up from, like, further positive, so to speak, than S&P 500 is. And this is S&P 500. Technically, this is tracking the index. So to get a more accurate representation of what you would be holding, it would be SPY. And if we switch that back to here, there you go. So YMAX is actually doing the best out of these. Now, it wasn't always the case. You can see here that kind of the week after the tariff announcement, this thing got really behind. And yeah, but you can see that, relatively speaking, the Yieldboost funds have been always behind since the very beginning. So moving on to the other chart, which is pretty similar, but it's has the STTY and QDTY as well as AIPI and YMAX. And the purpose of this was to also show you those other two funds. So the STTY and QDTY are suffering, right? These are the yield max funds that are similar to the XTTY and XDTE and QDTE from Roundhill. But you can see these are actually suffering as well. It's not just like it's not because these are bad funds. So that's the first thing to get straight. These are leverage funds, right? So they're going to be tanking a lot more, and that's just how they are. Because we're in a bear market, they decided to really hold back on these funds and decided to release them pretty late after the announcement. I think they had initially announced that they were going to release these funds. Like they had there was rumor that this was going to be released back in May of last year, right? So not that it was going to release in May, but they were saying, oh, these Yieldboost funds are coming out. And there's a lot of regulatory stuff that they had to come out with because a lot of, I think the SEC is not really keen to a lot of these ETFs, especially the 3X ETFs are actually no longer allowed. They're grandfathered in, so I'm pretty sure that had a lot to do with it as well. But you can see here that it's not doing too hot comparatively, right? So if you look at just the similar index tracks, like Yspy is around 3% lower than STTY, and QDTY is around TQQY is around 6, almost 7% lower than QDTY. So yeah, I mean, I'm actually, unfortunately, it's just how it kind of goes. And we can't really judge the performance yet for two reasons. And this is going to kind of sum up the video, but there's two reasons why we can't judge these funds yet. One is obviously it's only been about 2 months, so there's not a lot that has changed. And I'll be happy to make updates, going forward, past the 2-month mark. My bad. Maybe something like 6 months and then a year or something like that. But as well as we're going to need to see how these perform in a bear market, because it's very possible that these compare very well to these other funds. And if we look at that, actually, so we can compare QQQ versus Tqqy itself. And let's just drop this. And we can compare it just the same date range, just for consistency's sake. But you can see here that it's 5% versus 25%. And that's not exactly 3% or 3 times difference. And that's because of volatility drag. So there's another thing, or volatility decay. There's another thing in line there. But what's interesting is if we take a larger look at this in the last year, up until March, these were actually, like at the highest point here, this was up 54% and this was up 22%. And if we look at actually a larger range, like this becomes more true the further back you go, because you gain so much momentum on the top here, right? Like at the peak of this November 2021, up, this is up what? Almost over 4 times the amount. Yet you lost it all in the span of about a year. Yeah, almost a year you lost it all. And then you go all the way back up to those crazy returns and you're all the way back down. Now, right now, for example, we're actually up 250% on TQQQ and QQQ is up 124%. So it's about 2x. But another thing to show you would be something like QLD, which is a 2x fund. And I'll show you how that compares. So you can see here that QLD is actually really close to TQQQ, but at no point did it go lower, I think, than, like it was slightly lower here. And we can see that on a more or lower time range here. So, but again, you're not exactly supposed, these aren't designed to be held for the long term. So, except if you're using them against a hedge like I am in my portfolio. But my point is, once there's a long bull market, kind of like what we just came out of, there's a very high potential that these are going to do well. But it's also very, it kind of comes down to how are they going to pay out their dividends? Are they going to pay them in terms of, holding a lot back and giving more consistent premiums? Or are they going to pay it all out in full? And we've seen this with other ETFs where they kind of keep a little bit of a reserve so people can have a consistency, because that's what a lot of people are looking for, is having these as income. And if you have a lot of volatility or variance between each of your payments, that's going to hurt your lifestyle quite a bit. So I can't remember whether or not they decided that inside the prospectus or not. But another thing to mention is stuff always changes, right? We've seen YMAX change their funds like 5 times. Like Ulti is like a very good example of this. It's changed its holdings rapidly. It's changed from monthly ETF to a weekly ETF. It's changed its strategy, not even just its holdings, but its strategy at heart completely. And so there's a lot of different changes that ETFs can make in its lifetime. So I think it's too early to get into these funds, personally. I think we don't know how they're going to perform in a bull market. And because of that, I wouldn't be comfortable holding them. And like I showed earlier, I have it here. Year to date, or I mean, technically since they came out, it's down almost 20%. With all dividends accounted for, right? This is with total return. So I just don't think there's a reason for you to be in this fund. And if you want to still get dividends, what we can actually do real quick is put in those other 2 funds from Roundhill that I was talking about here. And I really wish they didn't reset the span, but you can see here that those funds are also down quite a bit, right? Let me get rid of YMAX and Yspy and put in, what was it, STTY and QDTY. Let me put all of these in here and go on the 26th of February here. Right, so all across the board, we're seeing this. XTTE versus SDTY. SDTY is actually doing better in this circumstance. QDTY versus QDTE. QDTE is doing better in this circumstance. So it really just comes down to kind of weighing your options. But I think as a whole, these are just not worth going into, right? Now you could argue that you could DCA these, but even then, I wouldn't even try to DCA these and try to get those extra shares, because, or at least with the TQQY and Yspy, because we just don't know how they're going to perform in the future. There's a very large, I mean, this same thing happened with a lot of the YMAX funds, YMAX in particular, right? Where basically what happened was we were in a bull market for most of last year, right? And we saw crazy returns, like something like Misty or NVDY. We saw crazy returns. The problem was we never saw them in a real bear market, and now we have. And it's hurting, right? It's not able to bring, like, its capital appreciation is very lackluster because these are very focused on income. So they don't have a secondary, like, their secondary objective is capital appreciation, but not their primary. And it's not like this split objective. So when those fall, it's very hard for it to come back up. And so when we were in the bear market, you can see that. And we don't know if this could be the same thing with these two funds or not, right? So all that to say, and I'll just reiterate, I would wait. If you have bought these funds already, obviously, you're probably feeling the pain, and what it comes down to is whether or not you believe in the fund, believe in the company that's kind of directing this, right? So Granite Shares, and whether or not you believe in the underlying, right? Do you believe that TQQQ can be a profitable asset long term? Now, obviously, they're not just holding TQQQ, and you can actually see that here, right? But they have puts here, and that's another thing, right? There, I think these are I don't know, but this video's gone on quite a long time, but I'll end it here. Like I said, I'd be more than happy to make another update video later down the line. Hopefully in a lighter circumstance in the market, right, where we have some kind of a bull run, right, that we can kind of experience the growth on these funds. But if you guys want to see any other updates on any other funds that I have covered in the past, or any funds that you think I should cover, I'd be more than happy to kind of go into the details of that. Now, of course, I'm not a financial advisor or anything like that. I'm not telling you to buy these or not to buy these. That's totally up to you at the end of the day. And also, I'm just some random guy that likes numbers. I just happen to look at these charts and kind of come up with an assumption, as well as look at other stuff like the assets under management and whatnot. So with all that being said, let me know if you want to see anything else, and I'd be more than happy to make a video on it. But that's it from me, and as always, I wish you guys a well-to future.